Welcome back to the Daily Crypto Deep Dive. Bitcoin is back above $60,000, but nobody really trusts it. That is the strange mood in crypto right now. The chart has stopped bleeding for a moment. Bitcoin has found a little bit of support, and long-term holders are starting to accumulate again. But at the same time, ETF demand has weakened. Wall Street has turned cautious. Citi has cut its Bitcoin and Ethereum targets, and the market is still carrying the scar tissue of one of the most painful sell-offs since the last proper crypto winter. So today, the question is simple. Is Bitcoin quietly bottoming? Or is this just another trap before the next leg lower? Before we get into it, big shout out to our sponsor Kraken. If you are buying Bitcoin, Ethereum, XRP, Solana, or just building slowly through the chaos, you can check out the Kraken link in the description. As always, this is not financial advice. Crypto is risky, prices move fast, and you should only invest what you can afford to leave alone for the long term. And remember, we are giving 20 XRP to listeners who sign up using our link. Just drop us a message once it's done. Now let's get into the real story. The biggest reason this bottoming argument is interesting is because long-term holders are starting to behave differently. According to Glassnode data reported by CoinDesk, long-term Bitcoin holders have shifted back towards net accumulation after a period of distribution. In plain English, that means the wallets that usually hold through multiple cycles are starting to add Bitcoin again instead of selling it into the market. That matters because long-term holders are not usually the panic crowd. They are not the people buying because a green candle showed up on a 15-minute chart. They are usually the patient money, the cold storage money, the people who have seen Bitcoin crash 70%, 80%, and sometimes more, and still come back years later to higher prices. When those holders are selling, it can be a warning sign that the market is late in a cycle. When they are accumulating, it can be a sign that the worst emotional damage is already being priced in. But here is where we have to be careful. A bottom does not usually feel like a bottom. A bottom does not usually come with everyone cheering. It does not usually come with clean headlines, perfect macro, and every influencer suddenly agreeing that the next bull run starts tomorrow. Real bottoms are ugly. They are boring. They are full of doubt. They are when the people who bought the top are exhausted, the tourists have left, the leveraged traders have been wiped out, and the market starts moving from weak hands into stronger hands. That is why this moment is so important. Bitcoin does not need everyone to be bullish to bottom. In fact, it often bottoms when most people are too tired to care. But we also cannot pretend the bear case has disappeared. Citi has cut its 12-month Bitcoin target from $112,000 to $82,000. It also cut its Ethereum target from $3,175 to $2,240. The reason was not some tiny technical adjustment. Citi pointed to weaker ETF flows, stalled U.S. crypto legislation, and a lack of new investor demand. That is a big deal because the whole Bitcoin bull case over the last couple of years has been built around institutional adoption. The ETF story was supposed to be simple. Wall Street arrives, pension funds slowly allocate, wealth managers open the door, and Bitcoin becomes a more mature asset with deeper liquidity and less violent crashes. But 2026 is testing that theory. The problem with ETFs is that they make Bitcoin easier to buy, but they also make it easier to sell. When Bitcoin was mostly held on exchanges, hardware wallets and crypto-native platforms, there was more friction. Now if someone owns Bitcoin exposure through an ETF, they can sell it like any other risk asset. One click. Same brokerage account, same portfolio manager, same risk-off decision. That means Bitcoin is now even more connected to the traditional financial system. When rates rise, when the US dollar strengthens, when tech stocks roll over, when recession fears build, or when investors rotate into artificial intelligence, Bitcoin feels it. That is the uncomfortable truth. Bitcoin has won a huge battle by becoming more institutional, but that has also made it more sensitive to institutional behavior. So if you are asking whether this is a bottom, you have to ask another question first. Who is the buyer here? If long-term holders are buying but ETFs are bleeding, then the market is split. The Bitcoin native crowd may be seeing value, while the Wall Street crowd is still reducing risk. That creates a tug of war. On one side, you have the people who think Bitcoin near $60,000 is a generational accumulation zone after a huge drawdown from the highs. On the other side, you have portfolio managers looking at ETF outflows, weak momentum, macro uncertainty, and thinking there is no need to rush back in. This is why Bitcoin can look like it is bottoming and still be dangerous in the short term. A proper bottom needs absorption. It needs supply to come onto the market and get bought without price collapsing. It needs bad news to stop producing new lows. It needs sellers to run out of energy. We might be starting to see signs of that, but signs are not proof. There is also the strategy problem. Michael Saylor and strategy became one of the biggest symbols of corporate Bitcoin conviction. But when strategy's valuation falls close to or below the value of its Bitcoin holdings, the market starts asking uncomfortable questions. If corporate treasury companies were a big part of the upside narrative, could they also become part of the downside risk? That does not mean strategy is about to dump Bitcoin or that the whole treasury model is broken. But it does mean investors are now thinking about leverage, financing, preferred shares, debt markets, and what happens if Bitcoin stays weak for longer than expected. In a bull market, corporate Bitcoin buying looks heroic. In a bear market, people start reading the balance sheet. That is the difference between hype and stress. Then you have the psychological level around $60,000. This area matters because it is not just a price. It is a confidence line. Below $60,000, people start talking about $55,000, then $53,000, then $50,000. And once Bitcoin loses big round numbers, the fear becomes self-feeding. But if Bitcoin can hold this area, keep bouncing back from sell-offs, and long-term holders continue to accumulate, then the market starts building a base. Not a moon mission, not a straight line back to all-time highs, a base, and that is what people need to understand. Bottoming is not the same as going bullish tomorrow. A market can bottom and still chop sideways for months. Bitcoin can stop going down before it starts properly going up. That is exactly how brutal cycles work. First, the panic ends. Then comes the boredom. Then comes disbelief. Then comes the slow recovery. By the time everyone feels comfortable again, the best prices are usually gone. Veteran trader Peter Brandt has previously talked about Bitcoin potentially needing a longer bottoming process before a much bigger move later in the cycle. Whether he is right on the exact timing or not, the broader point makes sense. Markets do not always reverse just because people are tired of pain. They reverse when positioning, valuation, sentiment, and liquidity all start lining up. Right now, sentiment is damaged. ETF flows are weak. Macro is uncertain. Ethereum looks even weaker than Bitcoin. Altcoins are still in survival mode. Retail interest is nowhere near the mania stage. That all sounds bad. But this is where the bull case starts to form. Because if crypto is dead, why are long-term holders accumulating? If Bitcoin is finished, why is it still holding around $60,000 after one of the worst sentiment shifts in years? If institutions are truly gone forever, why are we still talking about ETFs, treasury companies, tokenized assets, stablecoins, and payment rails? This is not 2018. This is not 2022. The market is wounded, but the infrastructure is much bigger. The products are bigger. The rails are bigger. The political debate is bigger. The corporate interest is bigger. The stablecoin economy is bigger. Bitcoin has been hit hard, but it has not gone back to being a fringe asset. That is why I think this is one of the most important moments of the year. Not because Bitcoin has definitely bottomed. Nobody can say that honestly. But because we are starting to see the ingredients that usually appear near major turning points. Long-term holders are accumulating. Sentiment is ugly. Analysts are cutting targets. ETF investors are scared. Retail has gone quiet. The headlines are negative. And yet Bitcoin is still standing. That does not mean you go all in. It does not mean you ignore risk. It does not mean you pretend $53,000 or even lower is impossible. it means you pay attention. The trap scenario is simple. Bitcoin bounces above $60,000. Traders get excited. Late buyers pile in. Then ETF outflows continue. Macro pressure hits again, and Bitcoin breaks lower. In that scenario, this bounce becomes another exit liquidity rally. The bottom scenario is different. Bitcoin keeps absorbing bad news. Long-term holders continue adding. ETF outflows slow down. The market stops making lower lows. The $58,000 to $62,000 area becomes a base. Then, when macro conditions improve or a new catalyst appears, Bitcoin starts climbing from a place where most people had already given up. That is the battle right now. And honestly, the answer probably comes down to whether demand can broaden beyond the hardcore believers. Long-term holders can support Bitcoin, but for a real recovery, you need fresh capital. You need ETF flows to stop being a drag. You need the macro picture to calm down. You need institutions to feel comfortable taking risk again. And eventually, you need retail to come back. But the early signal usually comes before the crowd. That is why I would not be dismissing this accumulation data. I would not be laughing at the idea of a bottom. And I definitely would not be assuming that because the market feels awful, it must keep going lower forever. That is how people get shaken out. The harsh truth is that Bitcoin always makes you uncomfortable. It is uncomfortable to buy when it is crashing. It is uncomfortable to hold when everyone says the cycle is over. It is uncomfortable to take profit when everyone thinks it is going to the moon. And it is uncomfortable to do nothing when the market is chopping sideways and testing your patience every single day. But this is the game. If you believe in Bitcoin over a 5-year or 10-year window, then moments like this are where conviction gets tested. Not when the chart is green, not when the headlines are glowing, not when your portfolio is up. Conviction is tested when the asset you believe in looks broken, boring, hated, and heavy. So is Bitcoin quietly bottoming? My honest view is this. It might be starting the process. The long-term holder accumulation is a real positive signal. The fact that Bitcoin is back around $60,000 after heavy selling pressure is worth watching. The mood is bad enough to be interesting, but I would not call the all clear yet. The ETF flows need to stabilize. Bitcoin needs to defend this range. We need to see whether buyers step in again if price revisits the lows. And we need to see whether the market can survive more bad macro news without collapsing. So the smartest position is not blind bullishness, and it is not panic. It is disciplined patience. This might be the early stage of a bottom. It might also be a trap. But either way, this is exactly the kind of moment that separates people who are reacting emotionally from people who are building a long-term plan. And if Bitcoin is doing what Bitcoin has always done, then the next major opportunity will not arrive with a clear sign saying safe to buy now. It will arrive in confusion. It will arrive when half the market thinks it is over. It will arrive when the weak hands have left and the strong hands are quietly stacking. That might be what we are seeing now. As always, stay calm, manage your risk, think long-term, and do not let fear or hype make your decisions for you. Make sure you are following the show, and as always, we will see you at the top.